much amount of balance it comes. See here. Now the balance we need to deduct 0, 5, 12 minus 5 is 7, then 6, and then it's again 6. It comes 66,750 negative balance minus. 66,750 minus balance would be transferred. This is a closing balance in the month of September. It's an opening balance of October. So 66,750 rupees, it's a minus balance in the month of October. Now we need to find out how much total receipts remaining. Because of this is your negative balance and the sales is 1,44,000. So we'll see how much its balance you have in your hand. It comes to, this is around 74,250 rupees remaining balance in your hand. This is positive because of your sales amount is higher than the negative balance. So 74,250 after deducting the negative balance from your sales revenue, it is your balance in your hand. Now make a total of payment. The payment total, it comes to 6, 10, 12, 14, 19, 5, 6, 2,69,750 rupees. This is the total payments incurred in the month of October. So total payment, it comes to 2,69,750, where you have only 74,250 rupees in your hand. Let's see what would be the balance in case of this. So the balance in your hand, it comes to, it's very difficult, which you have only 1,95,500 rupees negative. It means the company has supposed to take a bank overdraft continuously in 2 months. One is in the month of September. If the same situation occurred, then in the month of September they need a bank overdraft is almost more than 60,000 rupees. And in case of in the month of October, they need a bank overdraft facility very close to 2 lakh rupees. It shows the cash budget situation of the business, where how much amount of revenue generate and what amount of expenditures are incurred in the respected month, and with the comparison of the total receipts and payment, what would be the cash inflow and outflow situation during the particular period. And on the basis of that, company can take their future planning and decisions for the cash resources as well as the cash utilization management. Here, now we'll start another problem regarding the cash budget. Cash budget problem we already discussed in the previous problem, that how the cash comes in the business and how the cash outflow from the business. Ultimately, it shows a part of cash management in the business. Here in the second problem, I am taking a few different problems as well as the same type of problems but in the different area. So we can at least get an idea how the problems and how the adjustments can be resolved in case of the cash in case of the different type of movements and the different type of transaction. So cash budget is all about the efficiency of a cash management for the business for taking a future path as well as they can take a future decision. Here the problem is taken from your assignment parts, and the question you can take it from your assignment part, which is a company expects to have a rupees 50,000 cash on hand on 1st January. From that, we need to prepare a cash budget and find out the cash positions for the coming 3 months for the period of January, February and March. So the 3 months period, we need to identify the cash positions of the company, and for that some informations are given as below. First information is given in the tabulation format, and in the tabulation format the information is given for 5 months, that is November, December, January, February and March. And for this 5 months informations, receipts and payment informations are also given. One is sales, then another is purchase, then given a wages, then factory overheads, office overheads and selling and distribution overheads. So that means there are 6 informations are given regarding the 5 months period. After that, other informations are also given, and in other informations we have almost 6 adjustments. Let's see the first adjustment, that is period of credit allowed by suppliers 2 months. It means that when you purchase certain amount of goods from your creditors, that means from suppliers, the suppliers offer you a 2 months credit period. When you purchase something, you have 2 months in your hand to repay the amount of purchase. The second adjustment is regarding the sales, and the sales is actually divided into a two part. The whole sales, from the total amount of sales, the 20% sales, that is cash sales. So out of which the 20% is cash sales, which would be immediately receive the amount from the sales, but remaining 80% sales, it's considered as a credit sales, and that amount credit period is offered by a company from our side to our debtors for a 1 month. So that means we offered a 1 month credit period to our debtors as for the credit sales. The next is delay in payment of all expenses for 1 month. That means the all expenditures are supposed to be paid in after 1 month. So if it is incurred in the current month, it will be paid in the next month. Next adjustment is, as I already mentioned in earlier, there are a few new adjustments. This is something new. Here we paid income tax in the month of March. So we paid income tax in the month of March, will be recorded in the March part. The company is to pay dividends to the shareholders as well as bonus amount paid to the workers during the month of January. So in the first month itself only they paid a dividend as well as bonus to their workers. And one more adjustment, that is something new. They purchased some plant, they ordered some plant, and that is received as well as the amount paid in the month of February. So we have an adjustments of regarding the cash budgets like this. Now we'll start the problem regarding the cash budget, and in that case the amount of cash budgets would be identified on the basis of a certain period. Let's begin with the cash budget. Format is remain same only. So 3 months period, we'll have a 3 columns for 3 months, and then the particular informations. This is the month of January, then February, then we have a month of March. And from all these 3 months, we will take the information and we will try to solve out the question as we were solved out earlier also. Here, first is always consider receipts. So as we already discussed, receipts, this whole cash budget problem has been divided into a two part. The statement has been divided into a two part. The first part is the receipts part and the second part is the payment part. So we will identify first all receipts. Under that, cash on hand is given. So first is cash on hand, and in the month of 1st January, as we've all discussed, that is 50,000 rupees cash. So we have 50,000 rupees cash on hand on 1st of January. Then how many receipts we have just identified? We have only one receipt, and that is sales. And under the heading sales, we have some cash sales as well as a credit sales. So we'll divide cash sales and credit sales realization value, and according to that only we will write the amount of sales. So this is what all about the receipts is consideration. So let's begin with the sales and identify the how much amount of the sales we have. So here, as we said, the sales has been divided into a two parts. The sales, some amount of sales we have a cash sales, and the some amount of sales we have a credit sales. We will find out the how much amount of cash sales and credit sales we have. So let's begin with this. Here I'm going to do a working for the same. And for that working, we need to calculate the 3 months sales. And this is month period. Working is for sales. This is January, February, and March. Now see here, if the sum amount of the credit period of the credit sales has been given for 1 month. It means when you are going to record the information for a month of January, you need to see the month of information regarding the month of December. So let's see the how much amount of sales we have in the month of December. We have a month December sales is rupees 84,000. So here 84,000 rupees sales December month, need to identify the how much 80% of the December month sales. Correct? Because of the 80% of the December sales is considered a credit sales, and that credit sales amount would be paid in the month of January. So how much its credit sales amount is 67,200 rupees. It's a credit sales amount, and this credit sales amount would be paid in the month of January. Now we'll have to see the month of January. So now here in the month of January, the total sales of month of January comes to 90,000 rupees. Now 90,000 rupees will be divided into two parts. One is 20%, that is your cash sales, and then 90,000 rupees into 80%, that is your credit sales. Alright, so first is 90,000 into 20% cash sales, and cash sales amount has been realized in the same month. So 90,000 into 20%, it comes to 18,000, and this amount would be realized itself in the month of January. So that's why it is written in the month of January. But 80% of the 90,000 rupees sales made in month of January, it's a credit sales, and this amount has been realized in the month of February. So how much would be realized in the month of February? That is 72,000. 9 8 is 72. So 72,000 rupees, it's considered a credit sales, and that is occurred in the month of January, will be received in the month of February. Moving to the next sales, and that is 1,20,000 rupees sales in the month of February. So February sales is 1,20,000 rupees. And again same 20% we need to identify cash sales. So 1,20,000, 20%, it's cash sales, and cash sales occurred in the month of February, received amount also in the same month. So 24,000 rupees of the February sales received in the same month, but we have a credit sales 1,20,000 into 80%, and that is credit sales amount, that is 96,000 rupees received in the next month. So that is received in the month of March. So February sales, out of which 80% is credit, which is received in the month of March. See the next sales, and that is the month of March sales. Here we just want to consider only credit sales. How much total March sales is given? That is 1,35,000 rupees. So 1,35,000 rupees sales, 20% is considered, and that is cash sales. We want to consider only cash sales because we are preparing a cash budget only for 3 months, March only. So a March sales, out of which 80% is credit, amount realized in the month of April. April we are not preparing, so we don't want to concern with that. Only cash sales is required, and that it comes to 27,000 rupees. So here in this regard, we have cash sales in the month of March, amount would be realized in the same month, that is 27,000. So we already have an information of cash and credit sales of the respected month. Shall we write it that? Now in the month of January, the cash sales is 18,000, credit sales is 67,200. In the month of February, cash sales we have 24,000, and the credit sales is 72,000. Then in the month of March, cash sales is 27,000, and the credit sales is 96,000. This is what all about a total, and this is total receipts. Now see, after the receipt parts is concerned, we'll need to see the how much payments we have made during the, or how much payments actually budgeted during the particular period. So here we have a certain amount of expenditures during the particular period, and then according to the adjustments we need to identify which payments made during the particular month, and on the basis of that we will identify the total amount of payments in the respected month. Let's begin with the first item, that is purchase, and we have an adjustments regarding the purchase also. That is the period of credit allowed by suppliers, 2 months. It means that when you made any amount of purchases, when you have any amount of credit purchase, the credit purchase is actually considered a 2 months credit, and that credit purchase will be paid after 2 months. So here the purchases are given from the month of November to March. So here let's begin the amount of purchases. Here we are preparing a budget, cash budget for the month of January, February and March. So it means the which amount of purchase will be paid in the month of January 2 months before. 2 months before, it means whatever the purchase you have in the month of November, that amount will be paid in the month of January. So coming to that particular part, here we have a purchases in the month of November, that is 45,000 rupees. So your first item, that is purchases, and purchases in the month of November, 45,000 rupees paid in the month of January. It means which amount will be paid in the month of February? December purchases amount paid in the month of February, and that is 48,000 rupees. So 48,000 rupees paid in the month of February, and in month of March paid amount is rupees 52,500. So this is your purchases. So in this way the credit period has been calculated, and on the basis of the credit period the purchase will be paid in the respected month and to be written in the respected column. Now coming to the next adjustment is third adjustment. Second is already done. Delay in payment of all expenses, it's for 1 month. So all expenditures are paid in the next month of actual incurred. So here let's begin with the first expenses, that is wages. What is the meaning of this adjustment? It means that if it is incurred in the respected month, paid in the next month. Here we prepared the statement for the month of January. So if what amount will be paid in the month of January? The expenses incurred in the month of December, in the previous month. So whatever the expenditures are incurred in the December, it will be paid in the month of January. So start with the month of December information regarding the wages. And wages incurred in the month of December, that is 9,750. You can write it here. Credit period is 2 months. If you want, it's 2 months, 2 months credit period. Credit period. And here wages, it's a 1 month. So on this regard, the amount of wages incurred in the month of December, that is 9,750, paid in the month of January. And following ways we will consider for the remaining months expenditures also. What amount, how much is paid in the month of January? That is 10,500 rupees. 10,500 is incurred in the month of January, paid in month of February. And how much it is actually incurred in the month of February? 13,500 rupees incurred in the month of February, paid in the month of March. So how much is actually expenditures are there, and which way it would be paid? This is wages. Now next is factory overheads. Factory overheads, even not only factory, office and selling and distribution, in all three overheads we have to apply a same formula. Expenditures are actually incurred in the last month but will be paid in the current month. So here let's begin with the factory expenses. Factory overheads, and we'll identify the amount of expenditures incurred in December. It's 8,250. 9,000 rupees incurred in the month of January, and in month of February that is 11,250. So this is the way to pay factory overheads. Now see the office expenses. Office expenses incurred 6,000 rupees in the month of December, January 6,000, and even February is also 6,000. So in all the 3 months we have a same amount of office expenses. And the selling and distribution is incurred expenses. In case of December it's 4,500. In case of January is 5,250. and in case of month of February, that is 6,570 rupees. 6,570 rupees. So if you are going to see here, all the expenses which are given in the tabulation format are going to record, is already recorded here. So here, whatever the expenditures are incurred in the expected month, which is already given in the table format, are recorded here in this way. Now we'll have to identify the adjustments on the basis of a certain amount of expenditures incurred during the period, and these were not given in the other information, these are not given in the tabulation format, but these are the expenses incurred during the period and given in, mentioned in the adjustments. Let's see the adjustment number 4. Income tax of rupees 57,500 is due to be paid in a month of March 15, or it means that the company has to pay the amount of income tax during the period of March. So this is ultimately an expense, so cash goes out when you paid income tax, but it is paid in the month of March 15. That means it will actually cash goes out in the month of March, and that's why we mentioned in the month of March the amount is 57,500. Income tax paid in month of March, rupees 57,500. Next adjustment is company is to pay dividend to the shareholders as well as bonus to the workers, and the amount paid dividend to the shareholders is 10,000 rupees, and the bonus will be paid to the employees, that is 20,000 rupees. But both will be paid in the month of January. So we have expenditures incurred in the month of January. One is dividend to shareholders, and that is 10,000 rupees. It's incurred in the month of January, as well as bonus paid to workers